Good morning and happy Friday and a holiday shortened week. This is Dan Russo, the Chief Market Strategist at Chaikin Analytics, giving you your update on the current market environment for December 27th, 2019, the final Friday of the decade. So driving right in, SPY, new highs with bullish money flow. Here's the SPY, the ETF for the S&P 500, has a bullish ETF power gauge rating and remains in a strong trend above the rising long-term trend line as it traded at a new high yesterday. Money flow remains bullish. And the one knock that I can see here in the near term is the same as it was last week. The overbought, oversold indicator is currently overbought for SPY. When we look at the power bar ratio, there are 119 bullish stocks for 60 bearish stocks for SPY as the trend does remain higher. New highs are not bearish the last time I checked. Small caps are now leading. We wrote about this earlier in the week. Here's the IWM, the iShares Russell 2000 ETF, has a bullish ETF power gauge rating, also in a strong trend as it traded at a new high yesterday as well, trading above the rising long-term trend line. 743 bulls for 223 bears. And we can see here, after spending the majority of 2019 as a laggard, of late, the IWM has begun to ever so slightly outperform the SPY. This is something that we've been watching closely. We've started to write about it, and we're going to continue to watch closely. Now, we're in a consolidation for the majority of 2019. High end of that consolidation at around 160, low end of the consolidation at around 144. So the consolidation zone was 16 points wide. Add 16 points to that 160 breakout level, you can start to think about $176 as a potential upside price objective for the IWM based on the breakout of the consolidation that was in place for the majority of 2019. The Qs, very bullish rating and remain strong leadership. We can see here the ETF power gauge rating for QQQ is very bullish, strong trend above the rising long-term trend line. 24 bullish or very bullish stocks for 11 bearish or very bearish stocks amongst the holdings of this fund, where money flow is also bullish. But here as well, right, all three of the major market ETFs are currently overbought. QQQ does remain strong leadership with the intensity of outperformance remaining strong of late. So it continues to be an area of the market where we are focused. 24 bullish or very bullish names there for consideration when the process is in place, right? We should be looking for leading stocks and leading industry groups. And we want to identify those stocks when they are oversold with bullish Chaikin money flow. Semis, are they taking a holiday rest? They do appear to be, right? SMH is an area of focus for us, very bullish. Chaikin power gauge ETF rating, strong trend above that rising long-term trend line. 11 bullish or very bullish stocks for one bearish or very bearish stock for an ETF that has persistently bullish money flow since late October, early November. Again, same here as with the major averages or the major ETFs, we are currently overbought. So maybe taking a little bit of a holiday breather, and who could blame it? Semiconductors have been strong of late and really been in a nice solid uptrend throughout the majority of 2019. Continues to be leadership. Right now, what I see is an overbought condition within the context of an existing uptrend. Will transports join the party? That's a question that I've been asking myself of late. Taking a look at the IYT, the iShares Transportation ETF, it actually has a bearish ETF power gauge rating. Power bar ratio is neutral at 2-to-2. The trend is strong as the fund is above a rising long-term trend line, but notice that it has not broken out, right? We looked at the SPYs, the IWM, the Qs, all breaking out to all-time or 52-week highs, but transports have not joined that party yet. And for those who focus on the classical Dow theory, right, when the major markets are making a new high, we look for confirmation from the transports. Hasn't been there yet. Really hasn't hurt you, but not there yet. So we're just wondering, as we go into the new year, will the transports join the party? I think that if they did get in gear with the broader market, that would provide a nice tailwind to the existing bullish trend. But right now, IYT has bearish Chaikin money flow. It's currently overbought, and we can see that it has been intensely underperforming the SPY of late to go along with that bearish ETF rating. So just something to keep an eye on as we move into the final trading days of the year. From a breadth standpoint, the metrics all remain constructive across timeframes, and that's important. The top of the chart, we're looking at the percentage of stocks in the S&P 500 above their respective 200-day moving averages, and we can see that that metric is at 79% and has recently broken out with the index itself. What about the intermediate term? Well, on that time frame, we can look at the percentage of stocks above their 50-day moving average and see that that is also at 79%. And importantly, right, we were highlighting these divergences. We're now starting to break this downtrend line and move higher. So confirmation in the long-term trend, confirmation in the intermediate-term trend, and also confirmation on a short-term basis. The percentage of stocks above their 20-day moving averages also constructive. Over 80% of the stocks in the S&P 500 are currently above their 20-day moving averages. So breadth across time frames remains constructive and remains a confirmation data point for the strength that we've seen in the equity market. Now, sentiment, on the other hand, is getting close to a point where you might want to think about probably taking a pause, right? We identify this 0.85 level for the 13-period moving average of the CBOE put-call ratio as a sign that sentiment might be coming a little overly bullish, right? The opposite extreme is when the average gets above 1.1. That tends to coincide with local lows in the market because sentiment has gotten overly bearish. So just something to keep an eye on. Sentiment is no longer a tailwind to the markets. So just something to keep in the back of our minds that, you know, whether we're looking at this metric, whether we're looking at the CNN Fear and Greed Index, which is now above 90 and in a position of extreme greed, sentiment was a tailwind back in late September, early October when it became overly bearish. No longer a tailwind, getting close to levels that could potentially mark a near-term pause in the uptrend for the S&P 500. Another area that we're watching closely is discretionary versus staples, and we watch this on an equally weighted basis. And the reason that we do that is because Amazon is such a large weight in the consumer discretionary portion of the market. So we want to neutralize for that large weighting and look at these two groups on an equally weighted basis. And what we can see is as the market started to move higher, this ratio was moving higher as well, i.e. consumer discretionary stocks were outperforming consumer staple stocks. But right now, we've kind of hit our heads on this declining 200-day moving average. The RSI for the ratio is kind of stuck in neutral ranges here, having failed to become overbought in the near term. So for a while, we've been talking about increasing signs of risk-taking in the marketplace, maybe seeing a little bit of a pause in some of those metrics. For those of you who receive my note every Friday and we look at the key themes and relationships in the marketplace, we're starting to see some stalling in some of those risk-on type themes, right? Too early to call a reversal, but just something we want to be aware of. This is why we look at all of these different metrics on a weekly basis, because we want to try to identify potential changes as early as possible. So the discretionary versus staples ratio is something that we are going to continue to watch closely. Taking a look at the leading industry groups now, we've sorted the leading subsectors of the S&P 500 by their 6-month performance to get a sense for where the momentum lies. And ideally, we want to have an understanding or try to gauge the odds of that upside momentum continuing. And the way that we do that is by looking at the ETF power gauge ratings for these different industry ETFs, and we look at their power bar ratio, and what should immediately jump out is that all of these leading groups, based on their past 6 months performance, have very bullish or bullish Chaikin power gauge ETF ratings, and all of the groups have bullish power bar ratios, i.e. more bullish stocks than bearish stocks as holdings within the individual funds. So to us, that increases the odds that this upside momentum is likely to continue. So when we talk about identifying the leading areas of the market where we think that that leadership is likely to continue, this is what we're talking about. These are the groups where we want to be focused for long ideas, right? Semiconductors, pharma, biotech, builders, healthcare services, and regional banks. All groups that we've been talking about and writing about for the past few months, all groups where we've identified bullish opportunities at the stock level when the process avails itself, i.e., meaning when bullish or very bullish stocks within these areas of the market become oversold with bullish money flow. Those are high probability setups that we want to try to take advantage of. So continue to focus on these areas of the market for bullish ideas. It's going to wrap it up for this week. Let's go through our key takeaways. New highs for the main markets while breadth remains constructive. Sentiment is becoming more bullish, and it is no longer a contrarian tailwind as far as I'm concerned. Semis appear to be taking a holiday rest, right? Not a caution sign, just a rest, a consolidation after a strong move higher. Makes perfect sense as far as I'm concerned. Continue to focus on those leading industry groups for new ideas, but keep in mind that markets are currently overbought. Utilize the checklist within Chaikin Analytics, right, to identify the types of stocks you want to own. What are the types of stocks you want to own? The types of stocks you want to own really can be identified in these 3 data points. Power gauge rating is bullish or very bullish. The stock is outperforming the market, and the stock is part of a strong industry group. From there, we wanted to think about when you want to own them, the timing standpoint, right? Well, we want to try to own them when the stocks are oversold within the context of their long-term uptrends and when they have bullish Chaikin money flow persistency. That's going to wrap it up for today. I want to wish you all a happy new year. I want to thank you all for taking time out of your day to listen to our thoughts and ideas. We will be back here next Friday with our first update on the market environment of the new decade. Have a great weekend, everyone.